today. I see that the attendance is, people are coming in, so I'll give it a couple of minutes, but welcome to our Women of Color session today. We are really excited for our session, which is focused on banking on relationships. Welcome, 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 everyone. My name is Audrey Owasum, and I am the WBENC program lead for the Women of Color session. And I am so excited for this session today. We have a great list of speakers ahead of this session. So we're really excited to highlight and have conversations around how to strengthen your business by building a strong relationship with your bank. It's really important. We learned this especially last year and this year with PPP loans. And so we have a great session in store for you. But first, I would actually like to thank a couple of people who made this session possible. I would like to thank our Women of Color founding sponsors, which are Altria, the Coca-Cola Company, JPMorgan Chase & Co., Southern California Edison, and Walmart for making this session and programming for the Women of Color program possible. Actually, I would particularly like to thank JPMorgan Chase & Co. and their team, specifically Jill Davis, Bill Capper, Jeanette Teppenhart, for working hard to put this session together. They worked very diligently to have make this session possible. So we're really excited. Keep in mind that this session is going to be very interactive, and our speakers will be taking questions at the end of the session. So please ensure that you put your questions using the Q&A button at the bottom of the screen, and please specify who your question is for. We would already see that the chat, some people are chatting down in the chat function. We would love to hear your comments about the session using the chat feature. So you can access that by clicking the chat icon at the bottom of your Zoom screen. Now, we are very excited to introduce our moderator, Thelma Ferguson, who is the Northeast Segment Head of Middle Market Banking and Specialized Industries at JPMorgan Chase. Thelma is responsible for serving core industries with sales between 20 to 500 million dollars. Thelma and her team of bankers, underwriters, client service employees offer financial advice, portfolio risk management, liquidity, cash management, and investment banking products and services to clients and prospects. In addition, she oversees the expansion of women and minority-owned prospects and clients nationally, as well as coordinates the collaborative efforts for all frontline sales initiatives between core and specialized industries. As I've read, Thelma does a lot, and she is very knowledgeable. And so we are really excited to hear from you, Thelma. And so without further ado, please help me in welcoming our moderator for today's session, Thelma Ferguson. Welcome, Thelma.
Thank you so much, Audrey. That was quite the introduction, and you are so exuberant and exciting. I hope that we can live up to the task. I'm sure that we can. So let me first and foremost, in addition to thanking Audrey, on behalf of JPMorgan Chase and all of the sponsors, I'd like to thank you and also thank WBENC. You are doing remarkable work, and that work really matters to this audience and to those across the country and the globe, so we appreciate it. So as Audrey said, welcome and good afternoon. I'm Thelma Ferguson with JPMorgan Chase, and I am super excited to be your moderator today for today's panel discussion. So I'm securities licensed, so let me first say, because I need to say this, that my thoughts are not necessarily those of JPMorgan Chase, they are mine. I wanted to start with the why today. Why are we here? Of course, we're here to highlight our esteemed panelists and their successful journeys, but we are doing that in the hopes that you, each and every one of you, will gain additional knowledge about building a successful business. Now, based upon WBENC's survey results of those that registered, I wanted to level set and let you know a little bit more about the audience in terms of those that are out there listening and watching today. The vast majority of the participants in the audience today are under $5 million in top line revenue. So I find this particular session super interesting because it's going to bring to bear a very broad array of different types of businesses, industries, those that are in startup mode, those that have frankly already gone through that phase and are very well on their way to being, on the path of raising significant dollars, and those that are just frankly innovative and fast growth. So I can't say enough about the mix that we have in the audience. The other thing that I wanted to do before I brought the panelists on was to talk a little bit about some stats that I think are really important. And these stats came from, if I could plug them, Digital Undivided, a study that they provided. And it was called Project Diane. It was based upon the survey of 650 Black and Latinx women founders who were startups and entrepreneurs. And here were some of the key findings that I think are really important and relevant to this conversation. The number of Blacks and Latinx women in the $1 million club, and let me explain what the $1 million club is for those of you that don't know. The $1 million club is those founders who have actually raised more than $1 million for their company. So that number between 2018 to 2020 for Black and Latinx women literally doubled to 183 women. Now, another fact, and this is more a fun fact, the majority of startups represented in the 2020 database were founded in either California, New York, or Georgia. And then the other thing that I would tell you though, and this is like the most relevant point in my estimation, is that the fail rate for Black and Latinx women founded startups in Project Diane for 2018 showed that only 27% actually failed, in comparison to 40%, a 40% national fail rate for startups that were founded at the same time. Now, just let that sink in for a second. Black and Latinx entrepreneurs and founders failed that much less than other companies of this type. But here's the but. The but is Black and Latinx women founders only received 0.64% of venture capital investments since 2018. That's sobering. Okay, on to our conversation. We are going to dive into a conversation today covering topics, as Audrey talked about how to begin a relationship with a bank, what a well-developed relationship with your banker can look like, and how that can actually make a difference in your business. And hopefully along the way, you will pick up a few tips that are meaningful to you and that will really make a difference along your journey. So I now have the pleasure of welcoming our panelists, Miko Branch and Dr. Lisa Dyson. First, Miko. Miko Branch is the co-founder and CEO of Miss Jessie's, an innovative premium hair care line. Miko has literally revolutionized the hair care industry and has become a leading pioneer of the natural hair movement by creating and marketing high performance and high quality hair care products. I took specific care to look at my hair today because I was on with Miko. Miko founded the company with her sister, Titi, and they named it after their beloved and fiercely independent do-it-for-yourself paternal grandmother, Jessie Mae Branch. Everybody has a grandmother like that in their home, I'm sure. The Miss Jessie's product line includes a variety of products for every type of texture and curl, from wavy to coily. Miss Jessie's has received countless awards and recognition from Allure, Redbook, Essence, Latina, Teen Vogue, and Elle magazines, just to name a few. Miko also recently wrote a book, Creating a Successful Business Naturally. Please join me in welcoming Miko Branch.
Thank you, Thelma.
You're quite welcome.
So great to be here.
Great to have you. I'd like to next introduce Dr. Lisa Dyson. Dr. Dyson is the founder and CEO of Air Protein. She is also a mission-driven entrepreneur with a passion for creative problem solving. Air Protein officially unveiled the world's first, okay, I want you to wait on this, the world's first air-based meat, which uses carbon dioxide to create vitamin-rich protein and requires a mere fraction of the resources and time that conventional meat production does. The company was launched in 2019 by Dr. Dyson and co-founder Dr. John Reed, and they started Air Protein as part of their mission to create a scalable, sustainable way to feed the Earth's ever-growing population by leveraging largely forgotten NASA research from the 1960s. And that research was used to explore means of producing food for the Apollo space missions. I can't wait to see that, by the way. Dr. Dyson has conducted research in bioengineering and physics at Stanford University, the University of California, Berkeley, Princeton University, the University of California, San Francisco, MIT, and last but not least, the Lawrence Berkeley National Laboratories. Everyone, please join me in also welcoming Dr. Lisa Dyson.
Wonderful to be here.
Great to have you, Lisa. So as we get started, I'm really going to just throw these questions out to both of you, and I just want you to answer as you feel free to do so. But I want this first question to really take us all the way back to the beginning of your journey. You know, what made you actually want to start a business? And how did you actually start the business?
Lisa?
All right, we'll jump in. For me, I am a physicist by training, a scientist, but my dad was an entrepreneur. He actually was the president of a chain of 55 hair salons, so it's nice to be on the call here with Miko today. Entrepreneurship is kind of in my blood. I saw kind of the highs and the lows of building businesses, of creating, having ideas and seeing them come to fruition, essentially. For me, I wanted to immerse myself in the business world, so I ultimately went to the Boston Consulting Group in order to do that. And then my career path kind of took a turn in 2005 when I went to New Orleans after Hurricane Katrina and saw really the devastating impact of a weather event. And, you know, I'm a scientist, so just thinking about climate science and how climate science says that there's going to be more and more of these huge weather events that are going to affect people in similar and worse ways. And as we know, a lot of people lost their lives. People essentially became refugees. It was really devastating. And so that caused me to start thinking about how could I be a part of the solution? How could I be part of bringing about, things that would help with this climate crisis that we have on our hands. And so ultimately, myself and Dr. John Reed decided that the role that we could play is by bringing technology into the picture and creating a technical solution that could help businesses scale things that were much more sustainable. And so we started a company called Converti in order to do that. And the premise of Converti was if we could take carbon dioxide and turn it into products of value, then it could scale through business. And so Converti is doing that. In the process of building out different solutions, we began to work on something that NASA had worked on back in the 60s and 70s. And that is, how do you create nutrients in a way that is significantly sustainable, uses minimum resources and minimum land. And we leverage some of their concepts to create a very nutritious protein. And this is a way that is very similar to making yogurt. It was actually similar to something that's very familiar to all of us. Making yogurt, brewing beer, making wine, these all require something called fermentation. And so using this process is very similar to fermentation. We're able to make protein in the most sustainable way on the planet, and ultimately created Air Protein as a company that could attack the sector that actually is one of the largest greenhouse gas emitting sectors, which is animal protein. It turns out that today, in order to make a steak, it takes 2 years. And a lot of greenhouse gases are emitted in the process. And instead, if you just think about that steak as what ends up on the plate, the product, the experience that you have, we can create that same experience, the textures, the flavors, and we can do it with a process very natural, just like fermentation, like making yogurt. But it's the most sustainable way to make that particular protein, that product, highly nutritious and flavorful as well. So we started Air Protein really to revolutionize the meat industry and to make meat a new way, in a way that can help us feed 10 billion people by 2050 without having such a negative impact on the planet.
So you're telling me I can get a grass-fed, aged steak that tastes exactly.
Something that tastes just like that, but it didn't take 2 years. It only took a few days.
Take you up on that. I'm going to come over and try one of those.
Wonderful.
But you know what? The first time that I heard about that, I was truly super, super impressed by it, and I continue to be. So we look forward to delving into this more. Miko, what about you?
Oh, wow. I think entrepreneurship really started in the household. I'm a native New Yorker, and my sister Titi and I were raised by a dad who came out of the civil rights era. And he thought it was really important that his girls be independent and be their own boss. Our dad was somewhat of a ladies' man, so he understood the traps that were out there for women. So he was blessed with 2 girls, and he actually raised us as boys. He put us to work very early on. We were no strangers to hard work. My dad was a serial entrepreneur. He drove cabs, he painted houses, he was a teacher. All this while going to school, and it wasn't uncommon for my sister Titi and I to be side by side with our dad, sweeping, mopping, doing whatever it took to just make ends meet. I think for me in particular, I was always artistic. I think I took after my mother, and I was always drawn to beauty. Whether it be a beautiful flower. And then, you know, I was interested in how things work and what made something beautiful. And that led me to a natural knack in doing hair. So it wasn't uncommon for everyone in Queens to get their first hairstyle done by me. And I think the combination of the work ethic that I had from my dad, and then also just my inquisitiveness and my desire to just know more about things that were beautiful to me. I think that combination led me to a career in hair. My sister Titi was more of the organizer. She was more of the methodical person, and she was also my big sister. So we were often in that big sister, little sister dynamic, and we couldn't think of better partners to be. And in our early 20s, we decided to, I think maybe our mid 20s, we decided to partner up, and Titi was my rep, and I did all the hair, and Titi called every single person in New York, wanted to know who needed a hairstylist. Luckily, it was Ashley Stewart. It's a retail chain for full-figured women. They needed 1 week worth of hair, hairstyling. I did it. We got $8,000, and that was the seed money for our first salon. Rookies in business, we lost our first salon. Luckily, we bought a brownstone in the Bedford-Stuyvesant section of Brooklyn. During that time, we refuged there, but I turned up pregnant, and I had a real strong connection with this baby in my belly, and I knew that he was here to stay. If you wanted to get your hair done, you had to come to our brownstone, and I lived on the 4th floor, and I did hair on the 1st floor. And it was actually bath time with my son, where he splashed all around, and I could no longer wear my hair straight like yours, Thelma, because I really enjoyed straightening my hair. And I really had to embrace the texture. Luckily, that started a conversation with our clients, and then I got very serious about learning all things curls, kinks, and waves. And quickly, my sister Titi and I took to our kitchen table in our brownstone from scratch. We created groundbreaking products like curly pudding, curly meringue, baby buttercream. And as a result, I think in this industry, or I know in this industry, the beauty industry, Titi and I have become known as pioneers and industry leaders in all areas of natural and curly hair.
Oh my goodness. The two of you honestly send chills down my spine, because you frankly represent so many things in terms of aspiration for so many people, in terms of not only being successful, but being successful women of color that are actually leading the way and doing groundbreaking things in such magnificent voluminous terms. I can't say enough about it. Both of you actually bring up some great nuggets. I think I'll pull on the thread around Titi, because I remember the conversations, Miko, that you and I had, and I asked you a question around business plans, and does it matter to have a business plan, and how does that actually work? And you said, you know what, I was the creator, but TT was the business head. So I'm just going to bring the real to you, Thelma, and I'm just going to tell you how it was. So why don't you guys talk to me about, you both had different paths, but talk to me about your perspective of the importance of having a business plan, particularly before you approach a bank or any other type of investor.
Mm-hmm. Lisa, you can go first, or
Okay, sure, absolutely. Yes. So definitely a business plan is critical, because it tells you where you're going, and it helps you just really think through, what the end goal is and the different paths to get there, and to chart a way to get there. So it's just critical to go through that planning process. The business plan is outdated as soon as the ink dries, unfortunately, but but to go through that planning process is critical, and to do it with your team is really very helpful, so that you're all on the same page. You have the same vision, you have the same goals. And with respect to a banker, it's really important to have that thinking done, so that when you go to the banker, you can communicate your path, and the banker can let you know the ways in which he or she can help you. And there are a number of ways in which a banker can help you, and having that path clearly laid out really helps them, introduce you to their colleagues, introduce you to various business units, services, vendors across the board. So it's critical to be able to show them kind of the different things that maybe don't come out in your conversation, but to communicate how it definitely helps to communicate how they can help you.
The thing that I would say about that first, and hopefully I'll give tidbits along the way as well. Let me just tell everybody, don't be afraid of banks. Don't be afraid of bankers. They're going to ask you a lot of questions, but they're doing it honestly from the perspective of just trying to make sure that every single thing that Lisa just said aligns against your thought process and what you have done up to that point, to just make sure that you're thinking it through. They're really doing it also in your best interest, because they want you to be successful. And when those things don't necessarily align, it doesn't mean that that's bad. It just simply means that that part of whatever that is needs to probably be fleshed out a little bit more. Mm-hmm. Miko.
Yeah. Ironically, Titi and I did not have a business plan. Titi and I just had that fire in our belly, and that we wanted to be our own bosses. It didn't occur to us that by being our own bosses, we can make a lot of money. All we knew is that we didn't want anyone telling us what to do. We wanted to try our hand at what we thought we were good at. And we were fairly young, and we wanted to enjoy our 20s, and we wanted to make our own schedules. So we thought it would just be so nice to be in business together. And, that's an interesting way to go into business, because it was kind of like free flowing. We didn't have that business plan. We didn't have any loans. We didn't have any special contacts. We didn't have a banker that we knew. We honestly didn't know that there were loans available at the time for a Titi and Miko. So what we did was we bootstrapped, and we really focused on our business. And because I was good at what I did on the creative side, and because I had a partner that I trusted and that was really maintaining and holding us down on all of the contracts, all of the operational on the operational side, I was able to really focus, and together we were able to grow our business. For our bootstrapping formula, it was pretty simple. We kept overhead low. We were roommates. We shared the same car. We shared the same clothes, and we didn't go out, even though we wanted this kind of loose and free flowing schedule. We made sure not to spend a lot of money on things and entertainment. So we really kept overhead low, but we made sure to put a premium on our services and on our products. And with that, with that equation, we were able to slowly but surely build capital. I don't think any fault to a bank. We just simply didn't know those kinds of people. I'm sure had we started to pitch to them, I imagine they would have thought our story was interesting and, may have supported us, but it just didn't happen that way. It wasn't until later, when we started amassing some money and putting away, and saving was also a big, big part of our working experience. We worked hard, we didn't spend a lot, and we saved. And I think, for the local, we started off at Chase in the local bank, and that local banker, got a chance to see, okay, this account is building slowly but surely. And, that's how we kind of started our relationship with our bank. And then once we outgrew that relationship, they would also make recommendations as to, what, I think if we, introduce you to another branch of the bank or, another tier of the bank, they might be able to really handle your business and your affairs better than we could. And that's kind of how our relationship started with our bankers. And for me, I'm a firm believer, even though we didn't have the business plan, I'm a firm believer that I probably wouldn't have changed anything. Learning our business firsthand was key to our growth, and just being able to have the growth and the money. So when we got in front of a banker, whether it be Chase or any other bank, we were in a position where we can really command our bankers' attention. So that's how it happened for us.
So two different paths that diverged in many ways from the standpoint of how you started. Both of you ended up at JPMorgan. So that says a lot about, just the fact that you dealt with the bootstraps. You focused upon your business plan in the one hand, and you recognized that you had to rewrite it as soon as you finished, Lisa. You, Miko, you and your sister really focused upon, the bottom line, making sure that the accounts continued to grow. When you failed, you picked yourself back up and you started again. You watched the expenses, et cetera, and then the bank began to watch you. One thing that I would say to everybody out there, regardless of whether you're looking to a bank for capital or not, you usually have a banking relationship because you have to have an ability to have your cash management and your treasury business flow through someplace. I would truly suggest to you, whether you're in a branch or whether you're somewhere else along the line, make certain that you introduce yourself to your banker. It's a super important thing for you to know who your banker is and for your banker to know who you are. And maybe that will happen through osmosis the way that it did with Miko. Maybe it won't, but you can control that. And that's a super important thing from the perspective of just making sure that you understand the dynamics of how banks work. Because if in fact you're doing that and you're asking questions, they are happy to sit down and talk with you about that path or anything that you're not comfortable with in terms of understanding. So talk a little bit more about your bank journey. How did your banking relationship, you've hit on it, Miko, somewhat, but Lisa, how did your banking relationship evolve? Because you've had other paths of funding along the way, I take it.
Yeah, and I would say, so Kiverty, had definitely a sort of a different path, and Kiverty was banking with JPMorgan as well with Chase. And so with Air Protein, we were introduced to Fred Royal by one of our advisors. And so that's really kicked off kind of a more in-depth relationship, I'd say, with the bank. And we started with the journey for financing Air Protein. That was the initial set of conversations, and they were very helpful. So the team that Fred put together there was very helpful as we navigated that, and ultimately led to an introduction to one of our for investors as well. So, you know, we've leveraged and been able to benefit greatly from, you know, knowing Fred specifically and the conversations that we've had with others, the teams that he's put us in contact with, and that's allowed our overall banking relationship to grow.
Absolutely. And Fred and I work very closely together. Fred is absolutely one of the best bankers that we have in this space. He heads up our diversity initiatives across the country, and I couldn't be more proud to have him as a teammate. Miko, you spoke a little bit about the fact that you were in the branch network, and your business began to grow. I'm assuming your balances began to grow. And some banker, I'll have to figure out who that is and thank them along the way. Someone found you and pulled you out of that grouping and said, your growth rate is such that you really ought to consider being called upon by the middle market, or was it the middle market first, or was it business banking first?
Business banking first.
So you really
maybe middle market, yeah, maybe middle market, but business banking stands out to me the most.
Okay.
And then ultimately, you know, we landed at the commercial bank, and it's just, you know, as we were growing our business and as we were focusing on our business, the people from Chase started reaching out to us, which was really delightful, and just started introducing us to products and recommending things because we were so busy with our heads down at our business. So it pretty much happened that way. Titi and I, we never had any investors. So we just weren't interfacing with financial people in that way, you know? So I think, you know, looking at the balances at our account really informed the local banker to the middle banker, then to the business banker, then to the commercial banker. And, you know, I have to say for, you know, the times when my Chase banker wasn't there with us in the beginning days, they're surely making up for it now. And that, you know, when things like the pandemic hits and knowing, you know, how the bank and how that banker can support and be of service to us is really wonderful, because I'm just busy wondering, you know, what's going to happen, you know, with this new phenomenon that's happening in the world. So I think the banking relationship that I have is really a helpful one, in that, you know, I'm still able to focus on my business while they usually get in front of me, or he usually gets in front of me to let me know what can be available and how Chase can help me. And I found that to be really, really wonderful.
That's great to hear. The pandemic. You know, we've all lived it. We're all still, to a certain extent, still living it. We're certainly seeing some great signs around the economy coming back in the other direction, but we all still recognize that we've got a long way to go as well. And I know that there are those out there that are still, you know, struggling with that from a business perspective. So talk to me a little bit about the pandemic, how you guys, you know, how it impacted you, and if there's any advice that you could give for those out there that are listening in around COVID-19.
Miko, do you want to start?
No, I'll let
Okay, all right. Yeah, so for us, definitely we had to shut down, as everyone did. In the Bay Area here, obviously being one of the first counties to shut down here where we are. And so the team did a great job of putting protocols, safety protocols into place so that they could get back into the lab, back into manufacturing our protein. And so that was a really nice effort of the team. Of course, we've been primarily remote. And one of the impacts, the longer term impact that has had, is that we've actually embraced remote. We've actually now hired people that are from different geographies, and that's allowing us to, you know, in the long run, give our employees more, you know, freedoms, as it were. They can come into the office in the future as they choose, but also they don't have to, and will allow us to access talent across geographies. So we're now going through this process where we're working to clone the internet instead of cloning the office. So that's been the biggest change for us, and it's great. It leads to more collaborative tools. It leads to, being very intentional about communication. And so it's changing our culture and also making us be intentional about culture. And so those are some of the positive, I'd say, long-term impacts of COVID on our company.
Mhm. I think for me, from the onset, my sister Titi and I really focused on our customer, I think in the most meaningful way, in that we showed our customer how to do her hair. Ironically, when we started out, our customer didn't know she had curly hair. Many of our ladies, primarily women, were relaxing and straightening their hair. So we were marketing to a market that hardly existed, but slowly but surely we built it out by simply sharing, ways to care for your natural and curly hair. And I think that really showed up and showed out in a wonderful way when something as just unexpected as the pandemic hit, and that training with our customer and how to do her hair was really key and essential. We did not shut down, and luckily our partners like the Targets, the Walmarts, the Walgreens, and the CVSs, they were deemed essential business and they didn't shut down either. And we were able to stay in business. And ironically and luckily, many women still took an interest to how they looked while they were working at home. So they continued to buy products for their hair. So that was really wonderful for Miss Jessie's during the pandemic. But I was really pleased and just really happy with the pre-training that took place well before pandemic hit. But on the banking side, it wasn't uncommon for me to get a weekly call or maybe a call 2 or 3 times a week when pandemic first hit, letting me know what products were available, whether it be the PPP loan or just like a simple call and check in. How are you doing? Are you okay? Do you need anything? And just kind of talking things through as we all kind of looked and watched and learned. So that was, our experience through the pandemic, but all the while and all the way, I felt like I was informed from the bank in terms of, the products that would be available, and maybe I should secure this now, or maybe not do this because of uncertainty, or maybe here's what the trend is going, and maybe you might want to look at this just to make sure you're covered. So it was things like that that were very, very helpful from Chase.
That's great. I'm glad to hear that. And I did not plug her for that, by the way. But I will tell everybody this. I think that it is a founder's natural inclination to just really hammer in and focus upon their business and not necessarily think about the rest of the business sometimes. And that's not always the case, but that is the case many times. So the ultimate goal, though, is that you've got to stay in business. You've got to come out on the other side of that. You've got to make sure that you have positive cash flow. You've got to make sure that you keep your employees, working. And this was such a different moment in all of our lives. I think that the banking portion of this probably was heightened that much more from the perspective of understanding what those needs were. So what I've heard from both of you is, you innovated, you were creative, you curtailed expenses. And on our side, we certainly, are looking at cash flows and trying to understand exactly how much cash a company has, just to make sure that we are helping to shore up whatever their needs may have been, either through PPP or through the other services that we had already provided, loans, et cetera. But as I think about that, I also think about it in terms of, again, the communication to your bankers on the front end, and your ability to make sure that you're doing that. But the other thing that's really important to everybody out there is making certain that you take the time to understand your own financial statements. I mean, many times individuals will hire others to do that, and that's perfectly okay to plug gaps where you don't necessarily have the best efficiencies in terms of being astute about it. but you really should roll up your sleeves and understand the dynamics of your cash flows and your business, your financial statements. What do you guys, any thoughts on that? Anything that you'd like to add around that piece?
I agree. For me, you know, when I first went into business, I thought that I would be styling hair all day. I had no idea that understanding a financial statement would be key to running a business or staying in business. And particularly after, you know, my sister's passing, where she often took care of those kinds of things, allowing me to focus on marketing or coming up with new product, or even on the salon side. I was amazed at the things that I learned how to do, was capable of doing, particularly after my sister's death. But I certainly understand the value of the financial statements. And although that's not like my natural instinct, I'm finding that just going through my financial statements and understanding it and reading it like it's a story really is kind of like the missing link for all of the physical or all of the day-to-day that I'm putting into my business, because I'm one of those weirdos. I'm still running my business. You know, I don't have, you know, a wizard that comes in. I still really run this business. So to see it on paper and to just see it, you know, in numbers really kind of fills in the gaps and just kind of just lays out the full picture and full story for me. So I'm finding that I really understand them in a way that it helps me and informs me to make better decisions in running Miss Jessie's. So that was an evolution. But once upon a time, I was making curly pudding and styling beautiful curly hair. And I don't know if I ever saw a financial statement in the early days.
Well, now you can make curly pudding and figure out how to get that dollar into the bank at the same time. So that's a pretty cool thing.
That's what I do.
Lisa?
Yeah, not much to add to that. I mean, understanding the financial statements are critical to understanding the business. And so there's, you know, with us, we're very much a tech company, food tech company. So focusing on the innovation is critical, focusing on getting the team to execute against the deliverables that we have, you know, the different partners that we have as we develop different food products, et cetera. All those things are important, but it's critical to make sure you understand the numbers, understand where the money's going. That's where you can find, you know, red flags. That's where you can find opportunities. So it's just, you know, important to understand the financial statements.
Yeah, it's amazing that the vast majority of the women in this study that I looked at from Digital Divide actually didn't have entrepreneurs or founders coming from the STEM categories. They were from other categories, you know, in the arts, et cetera. And so what I would say, it's actually a fairly simplistic way to begin taking a look at this. First of all, get excited about your financials, because that's exactly how you make your money, and that's how you're going to ultimately grow and do everything else that you would like to do with that business. But if you think about it from the perspective of making certain that if you're providing a product or a service, and if you just take that product or service through the entire cycle and trace it step by step of the cycle and bring that back to your financial statement to the point that that actually turns into 50 cents of whatever the product was, 60 cents of whatever the product offering was, whatever that margin was that comes back into the bank account. Follow that and then begin to build upon the financial statement that way from your balance sheet and your P&L. It will get easier and easier. The other thing that I would say is make sure, I think Lisa said this, the team that you build around you is important. So a good accountant, an accountant that will take the time to sit down and talk with you about your numbers, an accountant that will talk to you about the difference between a company prepared, a reviewed statement, an audited statement, why you need different ones along the way during the course of your evolution is a really critical thing as well. And then making sure that you go in and just, you know, naturally talk with your bank about where you are with your numbers. And the other piece of it, I would say, is open communication. Holding something back when you think it's bad news is not the way to deal with banks. Frankly, that's not the way to deal with business. but just tackling whatever your issues are head on and in lockstep is really critical as well. Would you guys agree?
Agree.
Absolutely.
Okay, so let's talk about accessing capital. There's a definitely a lot of individuals that are probably interested in that out there. What kind of capital have you guys? I think Miko, you talked about it a little bit. Lisa, you may have not done it as much, but talk about the types of capital that you found yourselves looking at as you went through your journey up to this point.
Miko, I'll let you go first. Yep.
Okay, thank you, Lisa. Like I mentioned before, we've never had any investors, so our capital, we really look to our business and how it ran and ways we can save and ways we can make more money. That's how we looked at capital. That's how we built capital. Growing up, we struggled with money. My sister and I, although my dad tried his hand at many different businesses and it was important for him to be his own boss, we just didn't have a lot of money flowing through our house. And we weren't, when I say we, all of us, we just weren't really great at paying the bills on time. So we felt like there was a lot of debt in our house. So when it came time for Titi and I to run our own business, we were really shying away from debt. And a loan meant debt to us, even though we would have loved that infusion of cash, or I imagine had we had the conversation about an investor giving us some money to build our business, I think very quickly Titi and I would have viewed it or looked at that money as debt. And debt for Titi and I was a bad word. So again, we focused on building capital by just working in our business. But with things like, interest rates being extremely low and just the uncertainties, there could be a death in the partnership, there could be a pandemic, anything can happen. I think, my ideas about money and how it works and how it can be helpful have changed somewhat over time, in that, if there's an interest rate that's extremely low, like now, it might not be a bad thing to reserve some cash and just hold it over to the side, because God only knows what's going to happen. So those are ways that, I've dabbled into cash where I didn't build it myself. But in terms of like investor money, that just hasn't happened for us. And that just hasn't happened yet. And when I say it, I'm not sure that that's something that we're looking for. Again, we're really focused on the business. So that's my relationship with money, loans, investors thus far. Hope that helps.
Okay, Lisa.
Yeah, and so with Air Protein started as a part of Kiverdi, and so the original investment into Air Protein came from Kiverdi, which is currently its parent company. So we actually spun out of Kiverdi last year was the official spin out, and part of that spin out process, we brought on quite a number of investors actually, and the three biggest ones are Google Ventures, Barclays, and ADM. So we're very much a venture funded company, and that was a Series A financing, and then we'll be doing further financings as we scale. So that's kind of the core source of funding for Air Protein. Other sources will be debt. So we will build facilities, making meat from elements of the air isn't an easy thing to do. And, there aren't facilities out there that are already doing it. So we will create our air farms, as it were. And so there's, equipment finance, product finance. Those are some of the other financing mechanisms that we will leverage as we scale to reinvent the future of meat.
Mm-hmm. Absolutely.
And I'll comment on one other area that is actually non-dilutive, and that's for something that we're doing specifically. Grant funding is also another avenue. So there's different governments, as it were, as well as nonprofits that are investing in ways in which we can reduce our climate footprint, ways in which we can increase food security, some of the other kind of issues that are important. There's funds available to that, and so grant financing is also another non-dilutive way to fund our business.
You're right. There's a plethora of different opportunities out there, depending upon the stage of your business and where you are, whether or not those are angel investors, friends and family, doing it on your own, doing spin outs, sponsors, private equity, hedge, you name it, and it is out there, grants, et cetera. So I think it's just simply a matter, Lisa hit it very spot on. It's a matter of what's the path that you actually want in terms of your business, in terms of ownership structure, et cetera. Miko has clearly said that, she thinks that she wants to hold on to the equity in her business. And so therefore that is probably not an option for her. But it is something at a minimum that all of you out there should just continue to think about and make sure that you thoroughly understand those avenues that are available to you. The last thing I will hit on before I open it up for questions is one that is near to dear to me, and it's leverage. And I think that on the one hand, Miko, you and I were having a conversation and you said, I didn't want it. You said it here today. I didn't want a lot of debt. I just didn't think that was the right path for me. I was very shy about entering into a lot of debt. And I think that debt can be utilized in a good way, of course, up to a point. Mm-hmm. And then debt becomes a little overwhelming, frankly. Mm-hmm. You've just simply got to make sure that you keep your leverage profile within a certain range, or if you go outside of that range, that you figure out how to lever and de-lever in a quick way, depending upon whatever project it is that you're embarking upon and what the timeline is for that project. And if you do that, again, in line with your investors, in line with your bankers, you will do it and you will fare well if in fact your business plan that you continue to change all the time works out in that fashion. So with that, I think we will open it up for Q&A. So let me see how I do this. I think I'm just supposed to hit this button. Okay. So this first question says, if a company has been with their bank for years and then realizes that they are unable to build relationships that support their business, would you recommend that the business open a second or third banking relationship or move their banking relationship to another bank? I guess I could answer that. And so I would say totally depends upon what it is that you're trying to accomplish with your banks. And so just as you have many sources of capital, you also have different types of banks as well. And I think it depends upon the size of your relationship, what it is that you're trying to accomplish from your bank, whether or not you're growing at such a pace that you need more than one bank, and whether or not that bank is, frankly, satisfying all of your various needs from a standpoint of products and services. So you're really going to have to look at that from your perspective, and then go in and talk with your bank around the issues that you're having, and then make some decisions from there. Okay, so this one says, thank you for this session and for your time. What's the best way to identify who the right people at your bank are to connect with, and who would you have a relationship with? So the first thing that I would do, and Lisa and Miko, you guys please chime in whenever you want to on any of these questions. I would say just make absolutely certain that you start with wherever you've opened up your accounts. So if in fact you've opened up, people normally just start, as I said earlier, by opening up their checking accounts, right? But then what they usually do if they're startups or they're smaller and they don't necessarily know how a bank is structured, they may actually just go to the first local branch, corner branch that they see, and they open up accounts and they never develop a relationship. They don't understand the structure. They don't understand exactly how the bank is structured, and they don't really understand where they fit. And if you don't sit down and have those conversations, that's going to be really difficult. So that's where I would start, and then you go from there. in terms of all of the things that I answered on that first question. So this one is specifically for Miko. Miko, how did you prepare yourself to effectively utilize all the products that were offered by the banks to you, as you mentioned?
Well, as I learned about the products, some of the products were a good fit, but then some of the products, they just weren't for me. So I think it was about the education and just understanding what they are and then jumping in and putting myself in the position of utilizing the products and just making a decision, will this work for me? You know, banks can be very helpful in many different ways. I know Chase has showed up for me in many different ways, but, you know, in engaging in some of the products, you know, there's some level of commitment there. So just kind of understanding that and how that's going to affect me and my business is also something that I'm always thinking about when taking up on, you know, certain products. But I think, you know, again, just kind of understanding what they are and how they'll work for you is the key, you know, when picking the just right product for you.
Absolutely. Okay, Lisa, I'll let you take this one. Can you please share some tips on how you really forged a strong relationship with your bankers?
I think that it really is about being open, that open communication. So having those honest conversations about, you know, what's going on, whether it's financing, whether it's things that are going on in the business. And then you know, because of that openness, you know, we've been able to identify and kind of talk to our key relationship manager there about various products and services that the bank can offer to help us out. And so I think that's really important, is just be that open communication.
I'd like to give thank you, Lisa. I'd like to give a shout out to my banker, Frank A. He is awesome. I call him after hours. If he thinks of anything, he's not shy to pick up the phone. That relationship, like Lisa mentioned, is so important. It goes beyond just the transactional, and it's really about establishing that rapport. Many of our bankers have other clients. It's not just Lisa and I. So to really get in front of your banker and let them know that you love them, you're excited to hear from them, you're interested in their products, and, you know, if you find the just right product for yourself, you'll engage and you'll take them up on some of the products. I think that that's been key. But I just, you know, when I hear from my banker, he's delightful. I'm excited. I love him. So just shout out to Frank A. at Chase. I love him.
Frank,
I've already given the Fred shout out. So
Frank and Fred, you guys are the best.
And Fred is awesome too. And it's really about, you know, your banker putting a smile on your face and just letting you know that they care about you. And that certainly comes across in the relationship from Chase as an institution, but through, you know, by way and through, you know, the Franks and the Freds and the Thelmas of the world. We really feel like you guys have our back. So I feel good about that.
Thank you. Thank you so very much. It's heartfelt. It really is. I'm going to have to get this question in because it's a little different. And I think that there are some others that are out there that would have the same question that was asked here of Lisa. And Lisa, this one says that you recently raised some funding in Series A for your company and product. Can you please share a few insights on what the banking process was like regarding funding from venture capitalists?
The banking process. So Thelma, maybe you can help illuminate that question, but the fundraising process itself was actually quite interesting from the perspective of doing it through COVID. So that was an interesting aspect of fundraising. And so I was able to travel the world without leaving my home office, as it were, and calls in Dubai and London and New York within, you know, 1 hour of each other. So that was a benefit, I'd say, of being doing it through COVID. One of the key aspects of working with Fred and team, the team that he put together there, was just being able to call on them as we're talking to different investors, as we're thinking about what's the best collection of investors to put together as we think through our future. So this goes back to the business plan concept and thinking about how do we want Air Protein to grow? What are the future fundraising milestones? How do we make sure that we can hit those milestones with our specific investors? What are the strategic strategic milestones, which investors will help out with those as well. And so that was really where the team was very instrumental in helping us really assess the different term sheets that we were looking at, even the terms specifically that we were looking at, giving advice on what's standard, what's market, where there's room. So I think that for us, it was very instrumental to have that JPMorgan Chase team really in our corner as we went through the whole fundraising process.
I think that was very well said. I think the only thing that I would really, elaborate on would be team. I think that a lot of individuals as founders or just trying to figure out how to make their way are not necessarily comfortable walking in and talking to a banker around their business. And should be the farthest thing from your concern. The second thing that I would say is it's really important to have preparedness and that whole dynamic. And that's what the team helps you with. They help to figure out exactly what, those presentations and those investors are going to be asking. And all the investors are trying to do is just try to figure out whether or not this is the right investment for them or not, and whether or not they're going to get an adequate return. It's as simple as that. So, really think about that very carefully and just make sure that you knock on the door, that you make that phone call, that you are focused upon developing those relationships. Lisa, Miko, unfortunately, we are out of time. I cannot thank the two of you enough for this great conversation. And on behalf of JPMorgan Chase, on behalf of other sponsors of WBENC, I just wanted to thank the audience for chiming in here, and know that this is a heartfelt journey for many of us. I hope that you've seen that during the course of this conversation, and I hope that you try to forge that relationship with your bankers. We're certainly trying to do that with you. And do I need to turn this back over to you, Audrey?
Sure. Thank you so much, Thelma, and thank you. Thank you, Miko. Again, very insightful, and we're so sorry we ran out of time. We had a lot more questions in the Q&A, which where individuals were eager about, but what a great conversation. And I know we talked about a lot, and so the replay will be available for everyone to go and watch, and it will be on the Women of Color website, and I believe someone will be sharing the link to where to access that below, so that you can sign up for updates in the Women of Color page, opportunities, and be notified for future sessions. Again, thank you all so much. Thank you to our speakers. Thank you to our attendees for attending today's session. And we look forward to potentially seeing you again in the next session. Thank you so much, everyone.
Thank you.
Bye.
Bye.